Edward, I don't know how many of you know that he's a CA, a chartered accountant. He actually started life like all good chartered accountants do at KPMG. And then moved on to the South African Reserve Bank into the financial department first as a financial accountant, and then only later got to the NPS side of things, where he was one of the instrumental parties in the first iteration of SARMOS, the RTGS. And then I think fell so much in love with what they've done there that he had to leave the South African Reserve Bank and actually also installed a similar real-time gross settlement system in a number of countries. I don't know even how many, but I know Norway is one of those, and there were a whole host of other companies. And that was as a member of Parago, so that was the company that actually I think helped you in the first place, and then also went out and provided this kind of solution to a number of other countries. However, he also came back eventually to where his first love lied, in the South African Reserve Bank in 2012, was it correct?
No, 3 years.
3 years ago. And immediately saw the opportunities to do, I think, two things, and that is, perhaps you can also say a word or two about that, and that is the new SARMOS, or the refreshing, the modernizing SARMOS, or the RTGS, and then I think the second part is Cyrus, where we go with Cyrus. So I think this is going to be very interesting, Edward. Thank you for being here, and over to you.
Thank you so much. I think the first thing that I can say safely is that RTGS systems are not the sexy part of payment systems. If we talk about payment systems should be invisible, all these things, the RTGS system is invisible. It's that real solid rail that actually, on which the other rails actually are added to. So not one of the sexy parts. I would say it's the plumbing, part of the plumbing of the economy, through the financial economy, and if it works, nobody knows about it. But if it doesn't work, it can create quite a big stink. So I think that's what it's all about. So I want to start off just to say, I think almost in terms of what we discussed this morning, even the SADC payment system was actually driven by this visionary strategic approach. What do we want to achieve in SADC? And you see there that, I think this was in the late 90s already, that this was agreed that each SADC country should have an efficient and effective payment system that is internationally acceptable. And I think a lot of work has gone through in that process. If you look at the 15 SADC countries, most of them, I think there's only 2 that doesn't have an RTGS system at the moment. One is implementing it at the moment, DRC. And most of them have sort of EFT systems in place. So something that has actually developed quite long, and a lot of the focus initially was helping countries to actually increase the efficiency of the domestic system. But then there was this vision to say that we need to interlink these payment systems within the region, and the purpose of that is to support the aims of SADC in terms of trade and investment. How do we make it sure that it's easier to actually trade with each other in the SADC region? So that was the vision that we started, and if you look at that trade and investments, I think, what are we talking about? So if you just look at the cross-border high-value payments, so these are payments that are flowing through SWIFT today, and that's the second half of 2016. You see that from SADC countries, the 15 SADC countries, South African Development Community countries, just for half a year, 4.8 million payments. Not a huge market space, but obviously the value quite high. And if you then look at that, you can see that of that, about 20% of that payments flow to other SADC countries. So it's a user in Zambia paying a user, a supplier in Zimbabwe or South Africa or Namibia or Botswana. And that's really the focus then is if you look at that 28%, how can we actually then look at that and make it easier to trade with each other, easier to actually invest with each other? Of those payments, quite interesting, South Africa, quite a big portion of that, more than 40%. Quite interesting, the second one is the DRC. also almost responsible for 18% or 15% of the payments, then Mauritius, Zambia, Zimbabwe, Tanzania. You can see that is where the flows are. I think quite important, these are all currencies. It's not the rand only. There's all the currency flows where there's a payer in one SADC country and the ultimate beneficiary is in another SADC country. So that's more or less the 1.3 million in a half a year, so 2.6 in a year. So with that in line, we then said that what we want to do then with the strategic objective is to make sure that we enhance the regional legal and regulatory framework. It's important that we need to have legal finality. We don't have a SADC law. So part of what we were doing in the SADC region is to make sure that we actually enhance it. And two of the outcomes of that is there's a SADC payment system model law being finalized as we speak that will help each of the countries to modernize their own act to make sure that their laws support the same principles. To support harmonization, and then we also have mobile money guidelines that has just been approved that will enable us to say how do we allow mobile operators and into the ecosystem of payments. Then the second point is then why we had Cyrus. We said we wanted to implement that integrated regional cross-border payment settlement system and also the post-trading clearing infrastructure. Now Cyrus is looking at the payment side, and on the security side, still a bit of work to be done there. And then thirdly is establishing a cooperative oversight arrangement to make sure that where we are crossing jurisdictions, that we are quite sure that from a governance perspective that we can make sure that the infrastructure is sound and safe. So I'm also overseeing, just see which of my regulators are here. It's also sometimes my colleagues, not always. If we look at what is the benefits of what we want to achieve on the high value, so the regional cross-border settlement system, I think first of all we wanted to increase the effectiveness of cross-border payments. First of all, speed. Today in normal cross-border payments, T+2, maybe T+4, depending on who's your correspondents and where your correspondents are. And that is one of the things that we said, if we can change that to immediate. So if you settle something through Cyrus, within, let's say, a minute, the beneficiary bank will have the funds and they can apply the funds. So it's actually increasing the speed. Also, reducing the number of currency conversions. So again, in the example, if there's an exporter in South Africa that is exporting to Zambia, through normal correspondent banking, if they use the US dollar, which is used quite often, what will happen, there will be a payment from rand to dollar with the cross-currency conversions, from dollar to Zambia kwacha on the other side, with eventually the importer are earning kwachas to do that side, and you have two conversions at least. And in this process, we talk about Zambia, it will be one. If you use the rand as one of the currencies. And that's one of the things that we're trying to achieve. And then for the central bankers, and in terms of financial market principles, is achieving settlement in central bank money. Normal correspondent banking, the exposure is with your correspondent bank. Another jurisdiction outside of your control. In this instance, the settlement happens in central bank money, and you have exposure towards the central bank, which hopefully has a lower risk profile than commercial banks. I think what's important when we look at the model, just to make sure we're on the same page, with Cyrus, we are only addressing the cross-border payments. So we're saying that if you look at this process, that in a country, South Africa still has their own domestic systems. BankServe, MasterCard, Visa, providing domestic clearing and settlement processes, settling through the RTGS system in South Africa called SARMS. And in Namibia, you have the same. You have their own domestic clearing systems, their own domestic settlement systems. And what we're trying to achieve is to say, if there's a payment that goes cross-border, how can we increase the efficiency of that? And if it's high-value payment, it will settle in Cyrus, another term developed by IT people. I wasn't there, so I can't claim responsibility. The SADC Integrated Regional Electronic Settlement System. So if you have that, it will settle in Cyrus. And I think quite important in the model is that each bank has a direct access to the system. So the role that central banks play is just monitoring regulation, unless they're also a participant. In this case, and I think also important, and if I just use FNB as an example, if they make a payment from FNB in South Africa to FNB in Namibia, it is settled cross-border in Cyrus, and FNB Namibia and FNB South Africa has their own accounts in the Cyrus system. So we'd probably say we are looking at what correspondent banks were doing in terms of the actual business layers in that process. And then hopefully in the very near future we will be able to start with the EFT retail payments, going through a regional clearinghouse and then settling in Cyrus. So I think quite important in terms of the business model is that banks have their own account, they're responsible for their own liquidity, it's responsible to manage their own process. It was quite interesting when we started to discuss, I would say some of the subsidiaries in some of the other countries was quite happy with the newfound freedom that they had, that they could control their own destiny and did not have to wait for mother office somewhere else to actually do things. So where did we start? And I was actually quite interesting. I was thinking, why did they ask me to talk about Cyrus? Cyrus is old news, and I realized we just implemented 3 years ago. So we talked about the previous PASA conference about 3 years ago. At that stage, it was still at the development stage. We started off in 2009 when we got approval to actually start with that process. Development started in 2010. And what we did basically is took the domestic RTGS system in South Africa samples, made a copy of that, took out some functionality that's not required in the cross-border domain, and then implemented that. Initially in the 4 CMA countries as a proof of concept. In the real life, because one of my colleagues always said proof of concept is not the real life, it was a real system. Starting off in the CMA countries to make sure that we test not only the system but also procedures, the legal framework and things like that. And that happened in July 2013, and from there we actually rolled it out to the other static countries in a coordinated and collaborative way. So what is also important in this process, and maybe to highlight, is that for this process we focused on one single currency. And that was the rand, one of the currencies in the SADC region that was used quite extensively. And you'll see some of the other slides bringing that out. So that's where we started off. Today, we settle between 20 to 25,000 payments a day, between 80 and 100 billion rand a day. In the countries, 9 countries that are currently utilizing Cyrus. And if you look at this nice growth chart, I think again there was a quite important thing. The banks were able to actually really integrate the back office systems into this process, and the automation started, and that is where we got the increases. So I think compared to some of the other regional systems, I think in Africa, so COMESA, the East African payment system, I think what was very exciting about this is the volumes that we reached quite soon in terms of the life cycle, quite high, and the volumes quite high also. And I think part of that process was to make sure that when we developed this, it was a collaborative process, where the banks were involved. They created a SADC Banking Association, getting all the SADC countries together. All the countries was involved, so although the payment team or the project team that sits in the South African Reserve Bank is responsible for this, it is something that is driven from the participation of all the countries in SADC and with all the other stakeholders, the Committee of Central Bank Governance. So that is where we are today. We probably could say that already, I think what was one of the problems, and that's why we went for this stage approach and proof of concept. Initially when we discussed the concept, it was maybe we'll get 10 to 20, maybe 100 payments a day through the system. And today we are actually already exceeding 1,000 payments a day, just to indicate, and that's why the approach was don't go too large initially, take it from small scale and then actually ramp it up. So quite effective. The countries today, we've got 9 of the countries already participating. These are the stats at May 2016. So you can see the 9 countries. And I think in there you'll also see that obviously the CMA countries quite active. Not only sometimes in those volumes are quite low, but the values are quite high. If you look at the SADC countries, Lesotho, Namibia, South Africa, Swaziland, quite active, because I think actually today it is mandatory for those countries, if they do a rand payment, to use it on a high value payment to go to Cyrus. And then some of the other countries, and specifically Malawi, Zambia, Zimbabwe, actually we are seeing quite a bit of volume already going through. So from that perspective, we could probably say job well done. There's 5-6 countries left. Seychelles, Botswana, Angola, Botswana, Seychelles, Mozambique, and the DRC. They still need to be onboarded. Seychelles already went live. They completed, they're already live. They joined us in June, and we're busy with Botswana, Angola, Mozambique, and DRC to actually handhold them a bit more, to actually get them onboarded, so that they can actually see the volumes coming through. Madagascar was out of study for a time, so they're catching up again, and I think we will actually follow up with them as soon as they are ready. So those are the settlements going through. Unfortunately, if we look at the rand payments flowing through the system today in those 9 countries, we are only doing just between 50 to 55% of the volume. 45% of the volume is still settled through normal correspondent banking avenues. And obviously one of the questions that we've been asking ourselves in the last couple of months is why? And there's a few reasons. One is pricing. I don't want to comment on the RTC component, but there is a sort of theme that sometimes goes through. One of the things that we did through the Payment System Oversight Committee is to look at the pricing. Did a survey on that, and it was quite interesting to see that for many, or most of the banks, the pricing for a payment through Cyrus and through normal correspondent banking was the same. No differentiation in pricing. And what we are trying to do with the banks in terms of the collaborative approach is say, what are the reasons? What is it that we are missing? Other was just some sort of practices. Some of the banks were still doing, through the SWIFT world, were charging back fees because the receiving bank was saying, well, I still have to do balance of payments reporting. If I'm in South Africa, I still need to do all my exchange control arrangements, and that is costing me money. That is people at the table and things like that that need to be done. It's understanding that, trying to identify the issues that can be solved so that the automation can take place, that the real-time ledger can take place, and that the hopefully reduction in the risk that we are seeing will actually reflect that. So one of the things that we are doing then is to actually discuss that and making sure that we understand the pain points and see how can we resolve it. The other picture obviously is to say that if we look at the SADC landscape, and this is now all 15 countries, again looking at the stats going back for the last half of 2015, is that if we look at the volume, more than 60% of all the payments within SADC is still using the US dollar. And one of the main reasons is in Africa, SADC, we're still doing a lot of commodities trading. If we want to support trade, there's no ways that we can convince somebody to say, don't sell your oil in US dollars, sell it in rand or Zambia kwacha if you sell copper or something like that. It's really supporting the trade. So I think part of that is just in terms of commodities. Other side, obviously, is just history. US dollar has always been the sort of reserve currency for cross-border trades. Even today, in many countries, if you tender, the tender is in US dollar because that is something that was easy to actually combine, easy to compare, and I think so part of that is the type of trades that we're happening, and the other side is just legacy. And on top of that, about 30 to 35% is today based in rand. So between those two currencies, we're talking about more than 95%. And then you can see the other currency, the euro, Botswana, Pula, and the other currencies coming in from that process. So this is something that we identified quite early. I think it's important also to say that when we moved on this road on going forward, the initial idea was still supporting a single currency in SADC. By 2018, when I joined 3 years ago, was the sort of the goal. Since that, I think the landscape has changed. And if you think of what's happened in the European Union and things like that, and the actual conversion criteria that you require before you can talk about a single currency, we are far away from that in SADC. And I think realistically we said that without trying to get bogged down in that, how do we actually support the trade and investment between the SADC countries? And one of the things that we then identified is that the rand is not the only currency that we need to accommodate. And as a result of that, we went to the Committee of Central Bank Governors and talked about other currencies that can be allowed in the SADC high-value payment stream. And the conclusion was all SADC countries can be eligible, plus the US dollar. I think really recognizing the major role that the US dollar still plays in this area. So That process has been ongoing. We have the in-principle decision agreement that we can actually expand this to other currencies, and now we're talking with the IT subcommittee in study to say, what are the different models that we should actually consider? Do we look at the centralized model, one system, multi-currencies? Do we look at the decentralized models where each country open up their RTGS system or make a copy of the RTGS system to accommodate other countries? How do we accommodate this? Taking into account also the fact that it should be feasible. If I'm doing 100 payments a year, it's going to be quite difficult to recover the cost of including that currency in the cross-border side if the requirement for that is quite low. So making sure that we put in systems that are sustainable. The Cyrus system, like the SAML system, runs on a complete cost recovery basis. So all the operational costs of providing that system are recovered from the users of that, is to make sure that when we actually look at the multi-currency facet, that we actually include other currencies. The target for this is to have a final model agreed between all the study countries. We've agreed with the commercial banks by the first quarter of next year, so that we then can take the next phase of the project and then start with the implementation of the multi-currency leg of that in the process. But allowing each country, allowing business, the end user, to say that if I want to export in Zambia kwacha and there's a real need for that, and I can see the benefit that the Zambian central bank can step forward and say, I'm prepared to make my currency available, take into account the impact on liquidity, and the impact on monetary policy, and the impact on how we actually roll that out. So that is the next phase. In parallel with this, also, when we talk about Cyrus, Cyrus is the foundation, is that we are rolling out the EFT credit stream. We've got a regional clearing settlement operator that's been authorized, BankServe, and we are working quite hard to get that off the ground. I think part of the uncertainty and delays was maybe two things. One was the whole discussion about the currency of settlement. I think now that we have that much more close in our roadmap, I think they can tick that one. And the other one was also the adoption of ISA 20222 as the message standards on that, and different countries being in different places at the moment in terms of being able to actually accommodate ISA 20222. But those are the sort of infrastructures that's been built, and I think with the EFT credit stream, I think gaining momentum. We're having meetings at least again with the CMA countries in the next month to get that going through in terms of what is happening currently in the CMA environment. And Zimbabwe and Zambia is basically ready to actually participate in the low value stream. So this is more or less the Cyrus story at the moment. So hopefully I've left enough time for a few questions.
Thank you very much, Edward. Any questions on Cyrus? Perhaps I can also ask, may we ask you other questions about RTGS locally? Or do we keep it to the topic?
I just want to see which hat I'm wearing today.
Adrian, you've got it.
In the consideration around currency, did you look at the possibility of a regional currency that was specifically just used as a reserve currency for this system? So something that each country could hold, but it's really just for the purposes of cross-border settlement.
I think initially, actually, when we started off with the concept was, why don't we create a sort of reserve currency? I think one of the main challenges with something like that is who's taking the exchange control risk. And I think in that extent, I think the central banks felt that they want to support trade and industry, but they don't want to take the exchange control risk. Because if you create the reserve currency, there's still a fluctuation. So if the rand changes because of an indicate or something like that, the guys in Zambia doesn't want to feel that pain on that day. And who's taking the exchange control risk? I think that was part of the thinking about that. And also, I think that's quite important. Why the central banks are not playing a role in the transaction itself. They're allowing the banks actually to play the role. They actually understand and manage the exchange control risk on both sides. If I have a customer in Zambia, I know what my arrangement is with my customer in Zambia. So I think that was part of the thinking. I think secondly, also maybe coming back to the stats if you look back at the stats from SWIFT, we know today that the US dollar and the rand is used for more than 90% of the volume of transactions. And it's really trying to say, let's support that, let's get a critical mass volumes going through the process, And then we can move, because I think what's important, even if we move forward, the business model has been agreed. So whatever we want to replace it, it is banks participate directly, they are responsible to manage the end customer in the process, and the central bank is only there as a regulator, as an overseer to say what is happening and taking responsibility for their participants. Because I think what's important even today, although I've got a legal contract with the banks in Zambia and Tanzania, my ability to actually enforce that in terms of central banks is outside of my mandate. But what we've done with the SADC Payment System Oversight Committee, I'm adding a bit on your question, is that the bank in Tanzania actually is responsible for their participants. I think that's the role and the model, but I think the reserve currency, one of the biggest problems is taking the exchange control risk. And nobody felt comfortable to peg it, to say, if you think of what Europe has done leading up to the euro, at some stages it was pegged. And somebody took on that risk to say, I'm happy to take on that risk. And I think at that stage, the central banks weren't comfortable that they wanted to be in that space. Yeah. Well, I think liquidity is one of the things, and I think one of the main discussion points and debates when we talked about introducing the US dollar was exactly around that. Who takes responsibility for liquidity? How do you make sure there's sufficient liquidity in the process? When we talk about any of the SADC currencies, that central bank has to take on a certain level of responsibility. So I'll make sure that there's sufficient liquidity. That's the one side of the coin. I think the other side is we are, to a certain extent, replacing correspondent banking. And what we were saying is that today, even when we started off, all the rand deposits was at the commercial banks in South Africa. The only thing we did actually, we moved it into the Cyrus system. And I think more or less the same that we see with the US dollar. Today, all the banks that are offering US dollar payment services to customers, to corporates and things like that, have the US dollar correspondent, and they've got dollars in that account that should be moved in for this purposes into the Cyrus system. So I think that's the thinking, but I think it's quite true. I think as soon as and I think that's one of the biggest risks. If you have something like the US dollar, our bit of small amount of volume and value in terms of world trade is so small that the Fed is not going to take us into account if they want to increase or decrease the availability of US dollars in the world. Although I think they do good business out of the fact that the US dollar is sort of a very important and strong currency used in cross-border trade. But I think that is one of the risks that you need to take into account and say, how do you actually do that? None of the central banks can issue US dollars, and it'll be done by the Fed.
You mentioned exchange control, the balance of payment reporting. How is that operating in the different countries? Whose regime is sort of put into place?
So in terms of exchange control, know your customer, AML, all those things, it's the responsibility of the domestic bank to comply with their domestic rules. So if I'm having a transaction from Zambia to South Africa, the counterpart in Zambia, the bank in Zambia must make sure that they comply with all the Zambia rules, exchange control, if there is any. There's not all of the countries have exchange control, balance of payment reporting and things like that. And the bank in South Africa must make sure that they comply. Having said that, I think we do see that there could be a lot of advantages in starting to harmonize even those things. So one of the projects on the go, there is they call it an exchange control subcommittee of the Committee of Central Bank Governors, although not all the central banks in the region have exchange control, is to actually harmonize the codes that we're using for balance of payment purposes. And to the extent possible, making sure that we actually understand the total value chain, so that we don't create issues. I think one of the things that we've identified in South Africa, banks receive this in the RTGS wall, and then they say, well, did I receive a prior instruction from my customer to apply the funds? Otherwise, I must stop the funds. I'm going to phone the customer and say, oh, we've received that, how do I apply? That's not the real-time world, and I think we're trying to resolve that, but each jurisdiction is responsible for their own application of exchange control, balance of payments, and AML requirements.
My name is Nsele. If I'm not mistaken, you mentioned about 6 countries which are not on board on the Cyrus. So what are your strategies about onboarding those countries?
So Shell's already been onboarded. So 5 of the 6 were supposed to be onboarded in May this year. But the testing and things like that was not going according to plan, and we did not want to expose the system. So what we've decided, Seychelles is already onboarded, they live, and what we're now doing, Mozambique and the DRC is the next ones we're going to go a bit more in depth, helping them to understand the system, taking the banks along, involving the central bank in the responsibility. I think we always see this is a SADC system, it's not a South African system, and I think the cooperation, even if the South African Reserve Bank is the operator of the system today, is involving the central bank on the other side. So we are quite hopeful that at least the DRC and Mozambique will be onboarded in the next couple of months, and then we will work with Botswana and Angola. So I think quite important for us to get them up to speed as quickly as possible. I think specifically because some of the volumes, it actually makes quite a lot of sense to get them on board.
Question, low value stream, you mentioned it quickly, and ISO 222. Can you maybe give a bit of background, what is viability and potential?
So actually, what we did is, in terms of the partnership, I think when we developed this project, because we always thought as a public-private partnership, if I can call it that, and the banks in the region organized themselves with the SADC Banking Association. We said that the central bank will take responsibility for the high-value payments, the large-value payment system, and developing CYRIS for that as the mechanism to settle other streams. Eventually, I think there was about other streams that was identified, and we allowed the banks to actually organize themselves to actually get that forward. Of that, I think there's three streams that I think are receiving immediate attention. The one is EFT credits, so just bulk payments across currently pension fund payouts and things like that. The system, I think, to the frustration of the operator, has been ready for a year. It was really getting the banks to actually test it. Zimbabwe is already done. But I think in South Africa the challenge is that ISO 20022 was adopted as the cross-border standard. And for a very good reason. In all of these countries we are using proprietary standards internally. So to try to agree between 15 countries on what are the standards we are going to use cross-border, we felt it is the best interest to adopt international standards and to look at what has happened. So the system was developed and designed on ISO 20022 from the day one. And it's really getting the banks up to speed to actually do their own development to do that. What is interesting in South Africa today, specifically between the four CMA countries, most of the cross-border CMA payments flows through the domestic clearinghouse in South Africa, which is not in line with international standards. So the first step that we will do, and we will agree a time frame still this year, the next month or so, is to actually get those off-sorted so that if a payment is made from South Africa to Namibia, it's settled in CYRIS, it becomes visible, and we actually handle it as a cross-border payment. Zimbabwe, as I've indicated, already ready, they've tested, they're quite keen to start. Zambia quite far advanced, and we will take it in from that process. But I think it's the first step for us is to just to get some basic volumes through the system so that we are comfortable with everything as well. Thereafter, lots of developments on mobile money. So say PA is writing a process with the Bill and Gates Foundation in Australia. Gates Foundation is to look at mobile cross-border payments and how would that fit into. Again, using CYRIS as the settlement of those interbank obligations, EFT credits, and then obviously we think cards and point of sales will be the next component that we need to look at. I think that has been delayed a bit to this whole discussion about the currency of settlement, and I think now that we're almost there to actually give the final answer to that, I think it will solve that. So if I make a payment between Zambia, if I use my card in Zambia to do a transaction at a point of sale there, the intention is that that will settle through CYRIS, the interbank obligations, but it's really to make sure that we understand the intricacies of the exchange rate changes, because the person in Zambia is going to get kwacha, and the person in South Africa is going to pay rand, to make sure that how we handle that. And then there's quite a bit of work done on with the securities exchanges also to get the systems, now that the payment side can actually happen, to also make sure that the securities delivery side can actually happen.
My question is mostly on the regulatory space. With everything that's going on, mostly in the DRC, because I know the story of the DRC, how are you going to manage to control all those central banks? Because it's going to be difficult for you to know exactly if the money is going to be available in the time of settlement? Who is going to carry all that risk?
So I think there's two components. In terms of the money being available, the system is a pre-funded system. We know in the system the money is there. There's no credit extension, so you have to pre-fund your account. Before the transaction will be settled, today we check, or the system checks, is there RAND available? Yes, there's RAND, and I can successfully settle this payment immediately. So the banks have to pre-fund. But what is important in terms of the roles of the different banks is that if a bank doesn't play according to the rules, let's say they are submitting instructions, it is rejected because of insufficient funds, or they have a lot of mistakes on the messages, we will then, and that's where the Payment System Oversight Committee comes into play. In that committee, we will then discuss with the central bank and say, your bank ABC is having this, please have a discussion, please come with an action plan how they can solve it. And the Payment System Oversight Committee has been based basically on the CLS Oversight Committee. CLS being available in 18 currencies, sort of the same sort of challenge. How do we make sure that the governance arrangements can take place? They created an oversight committee. The lead overseer for CLS is the Fed, supported by the Bank of England. And there they then agree as central banks, and they keep each other accountable as central banks for the participation of their participants in the process. And similarly in SADC, we've adopted exactly the same model with their permission to do that. Cyrus is operated in South Africa at the moment. The African Reserve Bank is the lead operator. The lead operator is sitting here, so I'll be careful what I say. Looking at that as a lead operator, but all the other banks central banks sign a memorandum of understanding in terms of their responsibilities in terms of the oversight committee when they join. And then they come together at least twice a year to make sure that the governance arrangement is not done. But in terms of the risk, because it's pre-funded, there's no credit risk in the system. There's a liquidity problem. If I can't get the RAND, how do I go and buy in the open market through a bank loan or whatever the cash would be? But there's no credit risk in the system. It's pre-funded.
I think that's what we have time for, Edward. I think there's still a number of questions. I would like to invite the people to perhaps meet with Edward here up front. Come and introduce yourself, ask your questions. We're going to have our lunch break now, so please just check. We're not going to, we're running slightly over time, but we're not going to start later than intended in the plenary after lunch. So it's unfortunately a little bit shorter. So quickly have a bite, and we see you back in the plenary room.